All right, everybody. Thanks for joining us today. We've got a great topic here for you in regards to things to consider for the cost, your upfront cost to buying a home. This is a lot specifically in the Idaho area. We're talking about the things that you would need upfront in the way of down payment, closing cost, inspection, appraisal, things like that. So I'll we'll be introducing Chase Hodgson here in a minute, but my name is Jerod Lee with My Home Connection, the associate broker and team lead. There's a couple programs specifically that we'll be discussing today for assistance through IHFA, the perfect home buying process, and maybe some sellers concessions that can be had depending on the market from sellers. So as to keep the expenses down, and actually I think you'll come to find that the upfront costs are less than the typical home buyer might anticipate. So significantly less in some cases. So we're excited to share this with you. And with that, we'll introduce you to Chase Hodgson with Summit Funding. How are you, Chase?
Man, I'm doing fantastic, Jerod. How are you today?
I am good. Thank you for asking. Thanks for jumping on and helping to share what it looks like to help homeowners buy in our market.
Love it. Absolutely. We need a lot more of that right now. We need,
Yeah.
we need to be able to get more of our home buyers qualified. Last couple days have been looking fantastic. We're starting to see finally some downward pressure on mortgage rates. So that's what we've been waiting for. What we've
Yeah.
been waiting for.
Yeah, I think the biggest question or myth that I hear quite often is what does it cost to get into home ownership? And it seems like most often people say 20%. Is that kind of your experience? Is there thought?
Yeah. So we're covering one of my biggest pet peeves, and there's an overall theme with this, right? It's just the lack of financial education in our country. Like it's just one of my biggest pet peeves. And what falls into that is one of the I believe one of the initial steps that you need to make in building wealth is owning a primary residence, right? Owning real estate is one of the best ways to build wealth. And so knowing what that process is, what the costs associated with it are super important. And we just don't start off early enough getting that stuff taken care of, right? So yes, that is true. 100%. Probably the what I hear the most is I don't have my 20% down,
Yeah.
or my credit's not high enough. Those are probably the two things that I hear the most. Um, and it is not true. There's a reason that 20% sticks in people's minds, and it has to do with mortgage insurance, personal mortgage insurance. But no, you don't need 20% down to purchase a home.
Yeah. Well, let's. I was just going back up here to talk about the specific items. I think the down is probably. I mean, you've already talked about that a little bit. So let's focus in on that. What that can be as low as what it typically is. Why the 20% number comes to mind, and of course, a lot of the sites out there make an assumption at 20%, which doesn't help at all because it actually
No.
causes the wrong effect. Is we're going to estimate it at 20%, and I'll let you speak to the mortgage insurance component of it. Which, if you're looking at a site, you're looking at, let's just say, $500,000 home, and they have a mortgage calculator. It's easy for them to default to 20% because
Mm-hmm.
once they put 20% down, mortgage insurance is no longer required, which that can be hundreds of dollars, which
Yep.
by them putting the 20% down, it eliminates that and reduces the estimated payment, right?
Yeah.
So that does a couple of things. One is it makes people believe that they need 20% to come to the table, right? Which
Right.
which isn't the case, and it so it scares them away, um, but it also creates uncertainty or confusion in the market.
Yeah, it does. And there's a lot of misnomers. There's a lot of confusion when it comes to buying a home. So it's going to vary a little bit from state to state, right? Depending on the programs that you have available to you. The term, in air quotes, is for first time homebuyer programs, which is also a little bit of a misnomer, because most of the companies and the agencies that provide these programs, it doesn't have to be a first-time home buyer. Most of those agencies and the programs are geared more towards income levels than whether you're a first-time home buyer or not. So in Idaho, we're really super blessed. I transact in 12 or 13 states now, and Washington's the only other state that I've seen that has as strong of an agency providing value to homeowners, or home buyers. So we have they're typically called bond agencies, and basically they're just the easiest way to describe it is a quasi-governmental agency that acts independently, and they provide programs to help people buy homes. It's that simple. On a conventional mortgage, the minimum down payment is 3%. On an FHA mortgage, the minimum down payment is 3.5%. With our bond agency, with Idaho Housing, you can get into a home with as little as 0.5% down.
Wow. So significantly different numbers, right? If you're talking about that same $500,000 home, half a percent is, why am I drawing a blank on the math here? $1,000.
Yeah. Yep.
So
you can, well, no, it's
because we're on camera.
Yeah,
that's too funny.
Well, shoot,
1% would be $5,000, so it's $2,500, right?
$2,500, yeah. Typically, what I see.
Sorry,
I don't work in finance. It's fine.
You know what? If we were looking at these screens, we'd have been fine, because we talk about our clients all day long. But right. And guys, if you're listening in, we were having fun of this before we started the show. That things are quite different when you're in front of a camera. So anyway, right. That's what we're laughing about.
We have these conversations all the time off the cuff, and then you put a camera up and you become Elmer Fudd. So
anyway.
So yeah, most of the time what I see in that 400 or less range, you're talking about $1,500 is the minimum, right? So now that doesn't mean that they're creating programs to get people over their head in homes either, right? There's with those programs comes a second loan. Your down payment is still there, and you have to pay that back. But basically, they're loaning you the down payment in order to help you afford the home. Yeah. And those programs work wonders to get people in, because now they're gaining equity, and the appreciation in their home. It's like a forced savings account, right? And so they're building equity. They're able to pay the down payment assistance off. They get better interest rates. There's a lot of things that these agencies provide, and in my book, Idaho Housing's like number one.
Mm-hmm. Mm-hmm. So the down payment we've talked about. The next is going to be closing costs. The sellers are disallowed to contribute to a down, so we'll need to figure that out with you as the lender. As closing costs, if we're in a good market, so that would be one of the next significant costs associated to that. But the beauty of that is, in a market or with certain homes, we can present a request to the sellers to help us with those closing costs up to a point, correct?
Correct. Yeah. And that's going to vary with the loan program that the borrower is qualified with, right? So if you're if you qualified conventionally, if you're putting less than 10% down, then the seller is only allowed to contribute 3% towards, in a seller credit towards closing costs. If you're putting anywhere between 10 and 25% down, then they're allowed to contribute 6%. If you're putting more than 25% down, then the seller's allowed to contribute 9%. So there's some different levels within the conventional arena. Most of the time, if seller concessions are really important, because it seems less important and less, they don't negotiate for them as much in the higher price points. It's always those first-time home buyers, or those second ones where it really matters, is where we see those negotiations. And so most of the time it's 3% on a conventional loan is going to be your max. FHA, you're allowed up to 6%. Seller concessions, USDA, there's no limit on seller concessions, and stepping back to down payment a little bit with a USDA loan, if you fall within a certain area, you can get up to 100% financing, and so you don't need a down payment. You just need to be able to come up with seller concessions. And then VA loans are a little bit different. There's a 4% seller concession, but it's up to 6% in certain areas, or in certain not in certain areas, but in certain instances with 2% allowable for discount points in seller concessions. So it really varies, but you can get a lot of help in getting those closing costs covered, just like your down payment.
Mm-hmm. So you take what is in the mind of the average consumer. I got to put up 20% down, and then then you hear the idea of closing costs, and then all of a sudden you talk about the other costs with appraisal, inspection, things like that. The inclination can be, you know what, just never mind. It's going to take me a long time to do that. But what you just talked about in the way of a pretty minimal, relatively speaking, down with seller contributing to your closing costs, and then by the way, our sponsor being the perfect home buying process, where we on our end are going to help with the appraisal costs and with the home inspection costs, as well as the other items that come with our 5-step program. So, insert sponsor here, right? Comprehensive relocation guide, a podcast series answering the questions you're going to have for your real estate purchase, some real estate secrets that you're gonna want to know about. We talk about appraisal. That's something that the buyer is going to incur within the loan, correct? Generally speaking.
Yeah. So,
or sometimes pay that up front.
Right. We're pretty restrictive in the lending industry, and the costs associated with the loan are very watched over. We covered that in a previous podcast as far as the regulations that changed around lending in 2008, or after the crash in 2008. And so all that's pretty restricted. The appraisal actually is the only fee that we can charge up front before closing. And so that's one that you'll typically have to cover to move forward. And depending on the lender, sometimes they want it up front, sometimes it's a closing. So that one's a little bit negotiable, but that is a buyer cost.
Yeah. Yeah, and so is the inspection as well. And by the way, we highly recommend inspections for every purchase, whether it's a relatively newish home to a brand new home to a mid-century home, and that is even if the sellers have had an inspection prior. So we'll have a podcast around that as far as why we make that recommendation. But the perfect home buying process, we wanted to to contribute to that so that we can ease that, one, the financial costs associated to it, and then two, the peace of mind associated to getting that inspection and knowing if you should move forward or not.
Yeah, absolutely. It's 100% key. You don't want to miss, mold. You don't want to miss, extensive repair costs that are now yours once you've closed on the home. You want to make sure you want that up front to know whether you can buy the house or to whether you can negotiate those repairs in your contract. Yeah.
No, we are going to contribute that at closing, but I think if we just kind of summarize everything here, especially with all the assistance we were just talking about and the options that you have at your disposal. I don't want to minimize the idea of getting into a house cheap, because the idea is that homeowners have skin in the game, right? People keep homes that they've made a significant contribution to monetarily and in every other respect. And I think in large part the mortgage meltdown happened because there was so few people that actually had enough skin in the game to do what it took to hold on to their home. So we're not that's not the approach here. There is more skin in the game, certainly after the mortgage meltdown that we had. But we also understand that new or first time home buyers, they need help to get in, because a lot of what people are using to buy homes are the sale of their prior home.
Right. And It's interesting, right? We have all these tools available to us, and that's where my job comes in, and where it's really important is you want to balance that. Just because they're available doesn't mean you necessarily want to use them. You need somebody that's going to look out for you and put you in the best financial position that you can possibly be in when purchasing a home, because I still think it's really important. And I'm not saying that everybody should own a home. I would love to see everybody own a home, just because I think real estate's a great way to build wealth, but it's not for everybody. But everybody that wants to buy a home, we want to help them get ready. And when you have all these tools available to you, what you have to understand is when you're borrowing the down payment, when you're using the assistance that a group or an agency like Idaho Housing provides, your monthly payment increases with that money that you're borrowing and that assistance that you're using. Excuse me. And so we need to make sure that we can balance what you need and then still have a payment that is realistic for your household.
Yep. Yeah, I think all of that said, and then just to add into your earlier point, I agree with you. I don't think everybody should own a home. I think almost everybody in their life needs a home. So,
Yeah.
If you're younger and you're mobile, your lifestyle isn't conducive to a home, you want flexibility, maybe not. What I will say is there's probably a point in time where you're going to want to buy a home because you've built a family, want to earn, wealth or whatever it might be. And what I'm leading up to is in any of those situations, it always makes sense to get in touch with you as a lender to make sure that you understand their goals and their objectives, so that you can help them sooner than later, rather than, kind of being behind the eight ball and trying to figure it out once you decide you want to go, right? You can much better help somebody out being a year or two ahead of their home ownership aspirations and helping them, improve their credit, to improve their position to buy a home. So I'm just recommending that you reach out to Chase sooner than later, get on the radar, start hearing the financial education things that he's talking about, instead of going, oh, I wish I'd have known how to better improve my credit. Oh, I wish I'd have known how much money I needed down. Oh, you know what I mean? The woulda, coulda, shouldas that are painful to learn after the fact.
Much less fun doing it in the middle of a contract once they're under contract, right, Jerod?
Right. I found that home I absolutely love, and now can you educate me on all this? And then it's tough to have those conversations that, oh, I could have saved you thousands of dollars if you'd have done it. This was 6 months ago,
Yeah.
or anyway.
Yeah, because it does, right? It affects where your credit score affects your interest rate. Where maybe saving a few $1,000s more over that month's time while you're shopping, can affect your monthly payment. And if maybe doing a split MI, and there's a lot that goes into a mortgage and structuring it in the best possible way for your financial situation. But sometimes it takes time to figure out what that is for you, and so the sooner you start, the better, for sure.
Yeah, and actually, go ahead.
I was just going to say, going back to closing costs, I think overall the national average is around like 63 to 6,600. It's typically a little less here, depending on the time of year. And I will say that one thing that I would like to point out when closing costs is, a lot of times people will tend to freak out about closing costs and not understand that a lot of what goes into your closing costs are paying direct bills to your house, right? At closing, you pay 12 months worth of homeowners insurance, right? And then they'll collect depending on the time of year, they'll collect a month or two or 3 months of that to go into your escrow account to continue making that monthly payment for you. And the same with your property taxes. Each state does property taxes a little bit different, but that can be a big chunk of your closing costs, right? And so having somebody that can explain that to you, what you're paying, and say that, oh, wait, the lender's really not charging me that much, or there's, the title company's not charging me as much as I thought they were. A lot of it is associated directly with the property that you're purchasing. And those are good things, because those are taking things off of your plate once you're moved into the house.
Yeah, and in the numbers you described, depending on the loan type that they have, almost, I hate to say almost all of those, but a lot of those will cover all that closing costs that you just mentioned, or a huge chunk of that.
Yeah, absolutely, especially in a market like today, right?
Yeah. Yeah. So, if your caps will accommodate that, and if we as a buyer's agent can negotiate that, you know,
Mhm.
I hate to say quite often, but there's a likelihood that we'll get that. Pick my words wisely, right? there's
Market
there
shifted at the same moment.
yeah,
Because we saw it, right? Good. No, closing costs? Really? You kidding me? No, we're offering 50,000 over asking price. Like in those types of markets, you're not going to get the help. I think right now we have a window, and I don't want to pretend like I'm predicting the future. But if you look at all the market statistics that have stacked up, right? You and I talk about this a lot, Jerod. Like where our current market is here. Um, and I think it has a lot. I think it's a lot the same throughout the nation, just because of of sheer numbers, right? If you look at the population, we're making a major shift right now. Prior to today, and man, I repeat this statistic a lot, right? Because I think it has so much relevance in our real estate market. But prior to today, the baby boomers were the biggest generation this country's ever seen. The cross section of home buyers that we're seeing now are, we're finishing that Gen X, or not Gen X, we're finishing the millennials and coming into that Gen Z. That cross section of home buyers, there's 10 million more of them than there were baby boomers. So that tells you right there, there's never been enough homes built in this country to service that kind of a demand.
yeah, yeah,
And so we're
and
way behind. We're way behind on supply, and we have that demand coming, and that doesn't even count, move up buyers, got people that are downsizing, people that are moving across, from state to state, which we're experiencing a ton of that as well.
yeah,
And so my feeling is that we have a good window here if you can get qualified, because the little bit higher rates, although it sucks for a monthly payment for a short time, it has slowed the competition in the market, which allows you to get the seller concessions that you need. But once the rates come down, I think it's going to be pandemonium. And I don't have a
yeah.
crystal ball, but you look at the numbers, man. Like it's really spelling out a pretty interesting story in our markets.
Yeah, that's a good point, Chase. If you buy a home today at the rates we're at, none of us have a crystal ball, but most speculate will probably level out into the fives or sixes over time, and you refinance, then now you've got I hate to say a more affordable home, but
Yeah.
now you've reset. Yeah,
Mm-hmm.
yeah, which is
Yeah.
missed, on a lot. And by the way, likelihood is based upon the supply and demand issues that you just described, they participated in appreciation over that time, which now you have that equity to put into your next home.
Yeah, the scariest thing, this, that if you're to look at, and not trying to fear monger, but what we've seen in our recent past is what happened that first year of COVID, right? We're talking literally, we saw $50,000 to $100,000 offers over asking price, and what that does, if there's enough of those, now you've set that market level that much higher,
Hmm.
and so that entire market is appreciated because of the demand. It wasn't a bubble. It was really demand that drove it, and that's why we haven't really seen prices. Everybody thinks prices are going to bottom out, and that's why we haven't seen that. They're adjusting downwards toward a normal trend line.
Hmm.
And so, but if you look at that, what happened that first year of COVID, and now we still have the same amount of demand. We still have the same amount of, like, so here in Idaho, we still have a ton of folks migrating from California, Oregon, and Washington every day, talking to people in those states every day. And now interest rates come down and everybody jumps back into the market. Now, what do you think is going to happen, right? As to your point, you can if you can qualify, you can buy now and realize that appreciation, right, in your own wealth, or you can pay that much more for a house, right? And I'm not saying, you have to get into a house, you have to strap yourself and be house poor and all that stuff. I never want anybody in that situation. Um, but if you can afford the extra payment for 6 to 12 months, I think it's going to be a massive financial benefit for you to do it now as opposed to wait.
Yeah. Well, and the beauty of the conversation with you up front is, a lot of people they forget that their income is probably upwardly mobile, right? You're in a career and you're, you know, in your younger years that trajectory is kind of here, but everybody bases their income, kind of here. Anyway, my point is that's just describing one type of buyer that could be
Yeah.
underestimating their purchasing power or where they're going to be, in the future. So if you have an improvement in your income while a reduction in your interest rate, from a refinance, that puts you in a great position. But and if you think that it's going to be a second mortgage meltdown or some type of correction like we had last time, you need to do a lot of research because very few, if any, will say that that's ever going to happen. We've adjusted across the market here, probably on average this last year, almost a year and a half, to the tune of about $100,000 because of the overpaying for the homes that you just talked about. We've corrected, but that's corrected because they were overpaid, not because the market is crashing.
Right.
And nobody's ever, to my knowledge, seen supply and demand, that law, ever not be in play, right? Nobody's saying supply will ever catch up anytime soon. And you mentioned earlier when the demand comes on, I think it's already there. It's just hovering.
Yeah, we've seen a lot of movement just in the last few days with that 0.5% change in the rates, right, from last week. Like it's there, 100% it's there. And now the supply could be worse because of the slowdown. Builders have slowed their production. Some of them have stopped, right?
Yep.
So we were already behind, and now we've had another slowdown. The demand hasn't gone anywhere. It's just been sitting in the wings, waiting, for that market shift. And it could be pretty interesting. And it's, for me, again, going back to my biggest worry is affordability. Like I think as a nation and like really here in Idaho, what we need to focus on is solving that affordability problem. That our first time home buyers, they need to be able to buy a house. And until we figure out the affordable housing situation for a lot of states, there's states that have been experiencing this for years, right? Like California. And we have to address that. I think that's a way bigger problem than anything else that we're seeing in our market.
Yep.
So
yeah, well, we're coming up on the half an hour mark here, Chase. So the two things that I would kind of wrap things up with is, one, we just had a podcast on the cost for home buyers could be increasing with this most recent NAR lawsuit. So review that podcast or reach out to us.
I'd like to make one final point on that too. You have to be careful what you wish for. There's a lot of people that are thinking this NAR thing is a big win for buyers and sellers. But I will say the changes that came in after 2008 made it about $2,200 to $2,500 more expensive for you to buy a home. Like the cost associated with it went up after those rulings.
Yeah.
So, I just say, I'm not saying change doesn't need to happen but small adjustments. Let's be realistic, folks.
Yeah. Well, I wanted to make the point, like, ask the question sooner than later, because if we think what could happen might happen in the way of buyers incurring the commissions for their buyer's agent, that'll add to it. Kind of a negative side of things, but on the positive side is to minimize the cost. We talked about seller concessions. We've got multiple builders, including one of our largest builders, offering $45,000 in seller's concessions right now. So $45,000 can go a long way in helping, to minimize your upfront costs, upgrades on your new construction home, and all that.
Yeah, absolutely. There's still a ton of benefit, a ton of assistance. If it's within your budget and it's affordable for you to be making the payment, I would definitely be looking now, sooner rather than later. I would not wait, because ultimately, if I'm wrong, you still own a home, and even the folks that bought it just before the '08 crash, they don't hate that they bought their home then and they kept it, right? Like
right. They did really well,
but they did extremely well when they sold and went to buy their next house. So, if I'm wrong, worst case scenario is you now have a home that is building that's going to appreciate for you.
Yeah. Yeah.
But if you would have to pay $50,000 or $100,000 for the same home in a matter of months, that doesn't sound fun at all.
Yeah. Yeah. Well said. So just to summarize, like I said, here's more details, the details again on the perfect home buying process. Again, either reach out to Chase or myself at either one of our websites or in the description below, and we would be glad to help to at least just answer the questions. It's a no obligation phone call or consultation, whichever you'd prefer. So. We just look forward to serving you in your home buying efforts.
Absolutely. Thanks again, Jerod. It was a pleasure to be on here, and
Yeah.
I am always open for questions and conversation around real estate and real estate investment. I'm an open book to how I'm investing in real estate through single family homes and development and all of the above. So I practice what I preach, and love to help you get started.
Well, you're not only a great guy, but a great resource. So we appreciate you having on the show, and we look forward to having folks reach out to you and see what you can do to help them.
Thanks again for your time, Jerod. Always great conversation with you, my friend.
Awesome. All right, everybody. Have a blessed day.